Right, so let's start with a quick check of the trading action on Dalal Street, where markets took a breather for the second consecutive day. Indices saw a sharp recovery in the last hour after slipping in the red intraday. The Nifty reclaiming the 10,900 mark with a slim 15-point gain. The Sensex and banks ending with gains of 0.1%. Mid-caps underperformed today. That index shedding 0.25% by the end of trade. The advanced decline ratio remained in favor of declines, though. And from Dalal Street to Earnings Corner, where Reliance Industries is all set to announce its third quarter numbers anytime now. That stock ending the day flat ahead of the numbers. Iron House experts Anisha Jain and Reema Tendulkar joins us now with the expectations. Anisha, coming to you first, what's the street expecting from Reliance?
Well, while the core refining business for Reliance is expected to be sluggish, it is the telecom and geo business as well as the retail which is expected to really drive the performance. Now, on a consolidated basis, we are working with a top line decline of around 3.5% on a sequential basis. That is because the price realization for the refinery business has been lower. EBITDA is expected to remain stable. The profits might jump up around 2% sequentially, and that is because we are working with the assumption of higher other income as well as lower taxes. Now, to break down the performance segment-wise, as far as the refinery business is concerned, the GRMs are expected to decline on a quarter-on-quarter basis by $1 per barrel and come in at a 15-16 quarter low of $8.5 per barrel, and that is because the Singapore GRMs also went down by around 30% this quarter. Overall, the gasoline and the naphtha cracks or the margins have been on the lower side, and the volume or the throughput is expected to remain steady on a quarter-on-quarter basis. Moving on to the petchem business now, which had been driving the margin performance over the last couple of quarters. This time as well, the PX margin performance is expected to negate the slowdown that we have seen in the polymer business, and overall the volume is expected to remain steady here as well. Moving on to Jio, wherein we are expecting a revenue growth of around 10 to 12% on a sequential basis. Their subscriber growth is expected to be at the rate of 10 million subscribers per month, and that's why we are working with a number of 282 to 285 by the end of the quarter. And even if you look at the ARPUs, they are expected to decline a tad bit and come in at a level of 127 to 130 versus 156 that we saw last year. Lastly, on retail, well, the scorching pace of 100% growth that we have seen in the last 3-4 quarters is expected to continue. We are working with a number of 37,300 on the top line, and the margins are expected to expand there as well. Overall, the stock has seen a movement of around 15% in the last 6 months. However, there is a bit of niggling worry regarding the capex and the balance sheet strength. So we'll watch out for all of these factors when the numbers come in.
Right, Anisha, many thanks for joining us with all the details. In fact, we'll wait for those numbers to come out as well. Let's go across to Reema, who's been tracking the Jio numbers specifically. Reema, what can we expect from the telecom arm?
Well, expect the momentum for the Jio business to continue. So we're working with a sequential improvement of 12.5% in the company's revenues, aided by strong subscriber addition. So in the month of October, we saw more than 10 million subscribers got added, and that seems to be the run rate. So for the full quarter, we're working with a net subscriber addition of 30 million, which would be lower compared to what we saw in the prior quarter. Margin expansion should be there, so we're working with EBITDA margins of 39%, and that will drive more than a 15% increase in the company's profitability. However, the average revenue per user would continue to come down. It used to be more than 150 plus a couple of quarters ago, and this quarter it could come down to 130. The key to track from the management commentary from the statement will be the Jio phone traction, any update on the Jio postpaid plans and the kind of traction it has seen, and also on the FTTH rollout. Also, balance sheet improvement will be tracked closely. They had announced plans to hive off their tower and fiber into a separate entity with the eventual plan to monetize it.
Right, Reema, thanks for getting us that preview. But standard disclaimer at this point, Reliance Industries owns Network 18 and TV 18, the companies which operate CNBC TV 18, the channel that you're watching. In fact, HUL also came out with its third quarter numbers today. The FMCG giant has reported strong volume growth for the third quarter. The company's revenue and profit numbers are also in line with street estimates. Manglam Malu is here with all the analysis and the details. Manglam, over to you.
Well, HUL's third quarter results, they were boringly good. Why do I say that? Because the key positive was about 10% volume growth, and this versus expectations of 6 to 8%. That marks the 5th straight quarter of double-digit volume growth for HUL. And mind you, this comes on a high base of 11%. The street was working with a rough 11.5% revenue growth, which would be about 6 to 8% volume growth and 3 to 4 price growth. But the company went ahead and made that revenue growth with 10% itself. So no matter how they come, as long as they come. So the revenue at 9558 crores, pretty much in line with our expectations of 9567 crores. EBITDA to around that 2050 crore, pretty much in line with what the street was working with. Net profit had an exceptional loss of about 62 crores, but if you account for that, it would be higher than our expectations by a 60 crores odd. But other than that, 1444 crores, pretty much in line with what the street was working with. Remember, the stock is closer to a record high, so it'll be very interesting to see how the street takes these numbers. The big trigger for HUL going forward will be GSK Consumers integration. What the management said was pretty positive. Domestic business saw price growth of 2 to 3%. They're going to be judicious in that. Premiumization is a secular trend, and in the near term, demand conditions are pretty stable, with rural outpacing urban demand. Home care delivered a double-digit growth. Similar was the sort of premiumization that we saw in the personal wash, as well as food and refreshments, where mass mobilization was at the lower end of the spectrum, and green tea drove the premium products. At the same time, margin improvement was led by prudent cost management in terms of input costs, as well as the operating leverage. Fourth quarter will be most important, as we can expect some better benefits of lower crude and better currency coming in onto their margins. That would be an important part. But 10% volume growth, pretty much in line with the reported numbers as far as the revenue, EBITDA and profits are concerned. These numbers boringly good.
Right. Many thanks, Mangalam, for bringing us all the details from HUL's third quarter performance. But also in stock-specific action, Jet Airways soared in trade and ended with the session with a gain of over 5%. This, as reports suggested, that the Jet promoter Naresh Goyal is ready to invest 700 crore rupees in the airline. However, the offer comes with a rider that Naresh Goyal's stake should not fall below 25%. Meanwhile, confirming a CNBC TV18 news break, the lead lender SBI has clarified that all regulatory approvals, including SEBI clearance, will be sought when a resolution plan is finalized for the airline. And from trouble in the aviation space to trouble in the automotive space, where the National Green Tribunal today warned Volkswagen that it would face punitive action if it failed to deposit a fine of 100 crore rupees to the Central Pollution Control Board by 5 p.m. tomorrow. Now, remember, in November last year, the NGT had imposed a fine of 100 crore rupees on the German automaker for installing defeat devices in their cars to meet pollution norms, or at least trick the system into meeting that pollution norm. Now, Volkswagen, on its part, has maintained that their cars are compliant with the emission norms in India. Ashmit is here with all the details. Ashmit, Volkswagen clearly facing criminal proceedings in a number of countries for that 2015 global emission scandal, and now it seems like the NGT is cracking the whip as well.
Well, they've of course been facing criminal as well as civil proceedings, but not just that. They've also in fact pleaded guilty in the United States and have agreed to pay a penalty of $2.8 billion. And that was essentially the question that was put across to the NGT when this case was first filed. The question that was raised is that the pollution norms, though might be different, but for a company which has pleaded guilty, which has agreed to pay a penalty, will also have to do that, should also do that in the country. The NGT in the month of November had in fact agreed to that position and directed Volkswagen to pay an amount of 100 crore rupees. Now, Volkswagen's defense is quite clear. They say that as far as Volkswagen cars in India are concerned, they're compliant with the emission norms prescribed by Indian standards. Further, Volkswagen has also argued before the NGT, it did argue today as well, that this matter has already been challenged before the Apex Court, and that until a decision is arrived at by the Apex Court, there's no point of paying that penalty of 100 crore rupees. But the NGT took exception to that. The NGT clarified that there's no two ways about it. There's nothing doing. There's no stay order from the Apex Court, and hence that penalty needs to be paid up of 100 crore rupees. And the deadline is tomorrow, 5 p.m. Failure to meeting the deadline will essentially, as per the NGT, translate into arresting of the directors of the company of Volkswagen India. So again, the NGT playing hardball here, but also keep in mind that this penalty of 100 crore rupees comes on the back of an expert panel report which had estimated the damage to public health at 171 crore rupees. So trouble's clearly mounting for Volkswagen. The next date to watch for will be January 21st. That's when the Apex Court will take up Volkswagen's petition.
Right, Ashmit, and we'll touch base with you again to take stock of that matter as and when it comes up again for hearing.